Welcome back to Iraqi Dinar. Alert today. We're diving into the big question on every investor's mind. Is the Iraqi dinar preparing for a major rate adjustment? For years, the dinar has been a hot topic in global investment circles. Every new policy, every announcement, sparks a fresh wave of debate. Now, in 2025, the conversation has intensified. While nobody has a crystal ball, analysts are closely watching Iraq's economy, monetary policies, and global relationships to figure out what's next. So, let's explore the latest indicators and expert viewpoints shaping the future of the Iraqi dinar. First, let's look at Iraq's economic landscape. The country still relies heavily on oil, with over 90% of government revenue coming from crude exports. Despite price fluctuations, Iraq remains a top oil producer, which provides a stable income stream. In recent years, Iraq has pushed to diversify its economy, modernize key sectors, and improve financial management. We're seeing a digitalization of banking services, restructuring of state institutions, and moves to reduce corruption. Analysts agree that while progress is slow, these improvements are creating a more favorable environment for currency stability. The Central Bank of Iraq, or CBI, is a key player here. It's maintained a fixed-rate system to prevent volatility, but has also rolled out major reforms. These include strengthening Know Your Customer procedures, tightening control over dollar auctions, and encouraging electronic banking. These steps are designed to align Iraq with global financial standards, increasing transparency and trust. However, the CBI has consistently stated that stability, not rapid change, is its main priority. This suggests any adjustment would likely be gradual and controlled. One of the strongest positive signals is Iraq's growing foreign reserves. Thanks to high oil revenue, the country's reserves of foreign currency, especially the US dollar, are robust. Higher reserves help support the currency's value, protect against inflation, and boost investor confidence. Many analysts see this as a sign that Iraq is in a much healthier financial position than in previous years. On top of that, Iraq has been significantly increasing its gold holdings. Central banks often use gold as a hedge against inflation and geopolitical risks. Financial experts believe this move shows Iraq is diversifying its assets and strengthening its economic stability for the long term. While this doesn't guarantee a rate change, it certainly improves Iraq's overall financial outlook. Now, let's address the gap between investor hopes and government strategy. Many investors, fueled by rumors, believe a significant rate increase is just around the corner. But the government and the CBI are far more cautious. Their focus is on controlling inflation, supporting local markets, and ensuring stability. A major rate overhaul could disrupt the entire economy, especially since Iraq relies heavily on imports. This is why policymakers are unlikely to take extreme actions without extensive preparation. We also can't ignore geopolitical pressures. Iraq's currency is deeply connected to regional politics, its relationship with the US, and internal stability. Analysts predict that if Iraq maintains political stability and improves international cooperation, the dinar will gradually strengthen on its own, based on solid economic fundamentals rather than a sudden rate jump. So, what are the experts actually saying now? They generally see three possible scenarios. The most likely scenario is no major adjustment. The government will probably maintain the current rate to preserve stability. The second, and also plausible, scenario is a small, gradual rate increase if economic indicators continue to improve. The least likely scenario is a significant revaluation. Analysts agree this is improbable in the near term due to the potential economic shock. So, to wrap it all up, is a rate adjustment coming soon? The answer is complicated. Positive signs like growing reserves, gold purchases, and banking reforms are there. But the government's focus remains. For decades, the Iraqi dinar has been a hot topic for investors and economists worldwide. With every new reform or policy shift in Iraq, the big question resurfaces. Is the dinar about to make a major move? In 2025, this question is more relevant than ever. Iraq is pushing forward with economic reforms, tightening its financial rules, and reshaping its entire economic landscape. Many believe the country is laying the groundwork for a significant change. But what kind of change is actually realistic? What are the experts saying, beyond all the online rumors? Let's start with Iraq's economic environment. The country's economy has always been tied to the global oil market, making it vulnerable to price swings. But 2025 is different. Iraq is now getting serious about diversifying its income, fighting corruption, and modernizing its banking and digital infrastructure. These are crucial steps for building a stable economy. Think of it like building a house. You need a solid foundation before you can even think about adding the second floor. These reforms, like promoting electronic payments and reducing reliance on cash, are that foundation. They're creating an environment where a controlled, planned currency adjustment could one day become feasible. At the heart of it all is the Central Bank of Iraq, or CBI. For years, its main job has been to keep the exchange rate stable, to protect people's savings, and prevent sudden price hikes. But now, the CBI is also leading deep reforms. It's upgrading anti-money laundering systems, tightening controls on dollar transactions, and cracking down on currency smuggling. When fewer dollars leak out of the system illegally, the dinar naturally becomes stronger and more stable. CBI officials have been clear. Their top priority is economic stability, not sudden shocks. If a change comes, they insist it will be gradual and backed by solid economic fundamentals. One of the most important signs analysts watch is Iraq's foreign currency reserves. Thanks to strong oil revenues, Iraq has built up a healthy financial cushion. These reserves are vital. They allow the country to defend the dinar, support essential imports, control inflation, and build confidence among investors. High reserves mean Iraq has the firepower to manage any transition smoothly. It's a position of strength, not desperation. This financial cushion is a key reason why experts believe that if Iraq decides to adjust the rate, it will be on its own terms. And it's not just dollars. Iraq has also been quietly but steadily buying gold. Gold is seen as a safe haven, especially during uncertain times. By increasing its gold holdings, Iraq is sending a powerful message. It's committed to long-term financial stability and protecting the value of its currency. This strategy helps reduce reliance on the US dollar and strengthens the country's overall financial standing. While buying gold doesn't automatically mean a revaluation is coming tomorrow. It's a clear part of a broader plan to build a more resilient monetary system. Now, let's talk about expectations. There is a big gap between what many online speculators hope for and what the Iraqi government is actually planning. Many dream of a sudden massive revaluation that would make them rich overnight. But the government's focus is on something far more practical: stability. They want to keep prices steady, protect citizens' purchasing power, and support businesses that rely on imports. A sudden, drastic change in the exchange rate could cause chaos. That's why policymakers prefer slow, steady, and predictable steps. Most serious analysts agree. A gradual appreciation over time is possible, but a huge overnight jump is extremely unlikely. So, what are the realistic scenarios for 2025? Experts generally see three possibilities. The most likely scenario, at least in the short term, is no major change. Stability remains the top priority. A second possible scenario is a gradual rate increase. Iraq continues its reforms, strengthens its banking sector, and grows its reserves. A small, controlled adjustment could be on the table. The least likely scenario is a large, sudden revaluation. This is the stuff of online rumors. But it doesn't align with Iraq's cautious strategy and could destabilize the entire economy. So, where does that leave us? Is the Iraqi dinar preparing for a major shift? The best answer is, not immediately, but the long-term preparations are clearly underway. Iraq's reforms are real, even if they're slow. The central bank is focused on stability. Key economic indicators, like foreign reserves and gold holdings, are improving. All these signs suggest that Iraq is working to build a stronger dinar, not through a sudden shock, but through a slow, methodical process. Investors should pay attention to official announcements and real economic data, not speculation. The country is moving in a positive direction, but patience is key. Is the Iraqi dinar on the verge of a major comeback? For years, this currency has been at the center of intense speculation. Every announcement from the Iraqi government or its central bank sends ripples through investor communities. Now, in 2025, the question is hotter than ever. Will the dinar's value finally change? Let's dive deep into the facts and separate them from the hype. First, we need to understand Iraq's economy. It's no secret that Iraq is an oil giant, with over 90% of its government revenue coming from petroleum exports. This makes its economy very sensitive to global oil price swings. But things are changing. The Iraqi government is pushing hard to diversify. They're boosting other sectors like agriculture and manufacturing, cracking down on corruption, and modernizing their entire financial system with digital banking and mobile payments. These reforms are crucial first steps. You can't have a strong currency without a stable economic foundation. At the heart of it all is the Central Bank of Iraq, or CBI. Their main job has always been to keep the exchange rate stable to avoid sudden shocks. But recently, they've been doing much more. They're tightening control over US dollar sales, fighting money laundering with stricter rules, and pushing for more electronic payments to reduce reliance on cash. The CBI's message is clear: stability comes first, so any change to the dinar's value would likely be slow and steady, not a sudden jackpot. Now let's talk about the big guns, foreign reserves and gold. Thanks to oil revenues, Iraq has built up strong foreign reserves. Think of this as the country's financial safety net. It allows the central bank to defend the dinar, control inflation, and give investors confidence. A healthy reserve balance makes future adjustments possible without causing chaos. On top of that, Iraq has been steadily buying gold. Gold is a classic safe haven, a hedge against uncertainty. By adding more gold to its vaults, Iraq is strategically strengthening its financial position and giving itself more options for the future. This brings us to the elephant in the room: investor hype. For online forums are filled with predictions of a massive overnight revaluation. While the excitement is understandable, experts caution against this kind of thinking. Huge currency jumps are rare and can be incredibly disruptive. They can trigger massive inflation and make imported goods unaffordable for everyday people. The governance priority is a predictable economy, not making a few speculators rich. So, it's wise to follow official news, not internet rumors. Of course, politics plays a huge role. A stable government, good relationships with neighboring countries, and strong international partnerships all contribute to a healthy currency. As Iraq continues to improve its internal stability and global standing, the foundation for a stronger dinar gets more solid. So, what's the most likely scenario for 2025? Most experts believe the status quo will continue, with the CBI focusing on maintaining the current stable rate. This aligns with their cautious approach. A second, moderately likely scenario is a gradual, controlled adjustment. PIRAX. Economic reforms keep progressing. The CBI might allow the dinar to appreciate slowly over time. The least likely scenario is the rapid revaluation that many hope for. The risks of market disruption and inflation are just too high. So, what does this all mean for you? Iraq is clearly laying the groundwork for a stronger financial future. The banking modernization, growing reserves, and institutional reforms are all positive signs. They are preparing for a future where the dinar could be stronger, but they're doing it in a calculated, careful way. For anyone interested in the Iraqi dinar, the key takeaway is to be pragmatic. Focus on verified data from official sources, not speculation. A slow, steady improvement is far more realistic than a sudden spike. While the dream of a massive revaluation is exciting, a smart strategy is based on facts and a clear understanding of the long-term trends. Keep an eye on Iraq's reforms, its reserves, and its political stability. That's where you'll find the real story of the dinar's future. Is the Iraqi dinar about to skyrocket in 2025? This is the million-dollar question on the minds of investors and currency watchers everywhere. You've seen the headlines, you've heard the rumors online. But what's the real story behind Iraq's currency? Let's dive deep and separate the facts from the fiction. First, let's look at Iraq's economy. It's still heavily reliant on oil, which makes it vulnerable to global price swings. But there's good news. The Iraqi government is finally making serious moves to diversify. They're boosting agriculture, manufacturing, and even tech. Plus, they're cracking down on corruption and modernizing their entire banking system with digital payments. These aren't just small tweaks. They're foundational changes for long-term stability. So, what does this mean for the dinar's value? That brings us to the Central Bank of Iraq, or CBI. Their number one priority is stability, not speculation. Today, they've historically maintained a fixed exchange rate to protect the economy from shocks. While reforms are happening, the CBI is all about careful, controlled management. Analysts agree that if any change happens, it will be gradual and planned. Not a sudden explosion in value like some people hope for. A huge factor in this equation is Iraq's foreign reserves. Thanks to oil revenues, these reserves are robust. Think of it as a massive financial safety net. It allows the government to support imports, fight inflation, and give investors confidence. It's this strength that makes a future rate change even possible. But it also gives them the power to control the timing and pace, ensuring the economy isn't destabilized. And it's not just cash reserves. Iraq has also been quietly bulking up its gold holdings. Why does this matter? Gold is the ultimate safe haven asset. It adds another layer of security against global financial chaos and inflation. Shows that Iraq is building a rock-solid financial foundation from multiple angles, all pointing towards a stronger, more resilient currency in the long run. Now, let's talk about investor expectations versus reality. The internet is full of hype about a massive overnight revaluation. But financial experts caution against this. A sudden spike in the dinar's value could actually hurt the Iraqi economy by making its exports expensive and imports too cheap, leading to instability. The government's goal is sustainable growth, not a get-rich-quick scheme. So, what are the likely scenarios? Most experts point to three possibilities. The first, and most likely in the short term, is that things stay the same as the CBI prioritizes stability. The second scenario is a gradual, controlled adjustment, where the dinar's value slowly increases as economic reforms take hold. This is a realistic long-term possibility. The third scenario, a major sudden revaluation, is the one everyone talks about, but is the least likely to happen because of the risks involved. So, what's the final verdict for 2025? Iraq is definitely laying the groundwork for a stronger economic future. The reforms are real, the reserves are strong, and the strategy is clear. Stability first. While a gradual appreciation of the dinar is certainly on the table for the future, don't expect an overnight miracle. For anyone interested in the dinar, the best advice is to follow the official economic data and government announcements, not the online hype. The journey of the Iraqi dinar is a marathon, not a sprint. Is the Iraqi dinar finally ready for a major change in 2025? If you've spent any time in financial forums, you've seen the rumors, the speculation, and the high hopes for a sudden revaluation. But what's really going on? To get the real story, we need to look past the hype and dive into Iraq's economy, its central bank's policies, and what the experts are actually saying. So, let's break down the facts and see what investors can realistically expect. First, let's talk about Iraq's economy. It's no secret that the country is heavily dependent on oil. It accounts for over 90% of government revenue. This makes the economy vulnerable to global price swings. But here's the good news. In 2025, Iraq is actively working to change this. The government is pushing to develop other sectors like agriculture and manufacturing, cracking down on corruption with stricter oversight, and modernizing its entire banking system with digital payments. These reforms are essential. Without a strong, diverse economic foundation, any change to the currency's value would be incredibly risky. At the heart of it all is the Central Bank of Iraq, or CBI. Its main job has always been to maintain a stable exchange rate to protect the economy. But they're not just sitting still. The CBI is tightening control over currency auctions, implementing tough anti-money laundering rules, and encouraging a shift away from cash toward electronic banking. Their message is clear: stability comes first. So, if any adjustment happens, Analysts believe it will be gradual and meticulously planned, not a sudden shock to the system. A huge factor in this equation is Iraq's foreign reserves. Think of these reserves as the country's financial safety net. Having strong reserves means Iraq can defend the dinar against market pressure, support its own markets, and keep inflation in check. Thanks to oil revenue, Iraq's reserves are relatively high, giving it the flexibility to plan for the future without causing chaos. And it's not just foreign currency. Iraq has also been steadily buying gold. Gold is a classic safeguard against economic uncertainty. By adding to its gold holdings, Iraq is diversifying its assets away from just the US dollar and building an even stronger financial foundation. 2. While buying gold doesn't automatically mean the exchange rate will change tomorrow. It's a powerful signal that the country is preparing for a more stable and independent financial future. This brings us to the big divide: investor expectations versus reality. Many people are hoping for a lottery ticket-style win, where the dinar suddenly skyrockets in value. But experts urge caution. Large-scale, overnight reevaluations are extremely rare because they can cause massive economic disruption. The government's priority is stability, not making a few investors rich overnight. It's crucial to follow official announcements and real economic data, not just online chatter. Of course, politics and regional stability play a massive role. A stable government can implement consistent financial policies, build trust with international partners, and attract investment. Any move to adjust the dinar's value depends heavily on a calm and predictable political environment. Analysts agree that without political stability, any currency reform is simply off the table. So, what should you be watching? Keep an eye on key economic indicators like inflation rates, Iraq's trade balance, GDP growth, and of course, global oil prices. These numbers give you a much more realistic picture of where the dinar might be heading. When you put it all together, experts see 3 potential scenarios. The most likely, at least in the short term, is that the current exchange rate is maintained to prioritize stability. A second possibility is a gradual, controlled increase in value, happening slowly as the economy strengthens. The third scenario, a sudden, dramatic revaluation, is the one everyone talks about. But it's by far the least likely because of the economic risks involved. So, what's the final verdict? Is a major change coming for the Iraqi dinar? The pieces are definitely being put into place. Iraq is reforming its economy, modernizing its banks, and building up strong reserves of cash and gold. But the key word here is gradual. For investors, this means focusing on the long-term fundamentals, not on speculation. A stronger, more stable dinar is a very real possibility down the road, but it will be a slow and steady journey, not an overnight explosion.